Hi, everyone. Doesn't look like we have anybody with us tonight, which I'm surprised by. But maybe we have a few people that are coming late. So I'll just give you, or maybe that means everybody is good and doesn't need a study session, which would be, that's great. If you've got a good handle on these chapters, that's wonderful. I'm going to just, let's give a brief overview of the chapters. Again, we've got 9, 10, 11, and 12. Yeah, it should be. Double check. Confused this with a couple other classes. Yeah. 9, 10, 11, and 12 are going to be on this exam 3 for us. So 9, we were talking about long-lived assets for this one. So talking about fixed assets, property, plant, equipment, those types of things, or what chapter 9 covered. So you started out with talking about what the cost of an asset is, how we calculate the cost for that. Oh, and yes, you see the Christmas tree, right? We haven't gotten all of our Christmas stuff done, but we have the real tree up, but nothing on it yet. Notice we've got the tag still on it, so you can see my lovely undone Christmas behind us. All right, back to chapter 9. We've got cost of assets, how we determine those, what's involved with the cost of an asset. Then we talk about depreciation. We had several depreciation methods in chapter 9 and how to calculate those different depreciation methods to determine the depreciation for your fixed assets. Remember, land, we don't depreciate. Then we talked about some special circumstance with that. What if you need to revise that depreciation amount? Maybe your useful life changes, you need to change that. How does that change things going forward? Talked about impairing assets and also disposing of assets, whether that was to, just get rid of. Sometimes you may sell them, but we talked about disposals here. Then we talked about, you had a couple of analysis tools. All the chapters give you analysis tools in this one. I think we talked about return on assets. Asset turnover was another one that we talked about, and profit margin. And then after we talked about your plant assets, then we talked a little bit about intangibles. So these are things you can't touch, taste, feel, smell. They're not tangible assets. So goodwill or patents or trademarks, those types of things are going to be included as intangible assets. And different than depreciation, still a cost allocation method, but you allocate the cost of intangibles by using something called amortization. That tells us it's an intangible. A little different than depreciation, which is for fixed asset. Still cost allocation there, but for different types of assets. And then we looked at how we're going to see these presented and disclosed in the financial statements as well. Again, very brief overview, just the topics to refresh your mind on what we did for the chapter. Okay, I'm going to do that for each chapter again while I wait to see if anybody shows up. And if not, then I guess if you have questions, you can let me know that. But, I can't really answer questions without people here, so helps if you're here to ask me things. All right, let me flip. Just trying to remember all the topics in each of the chapters. 10 talked about liabilities in 10. So talked about current liabilities, we looked at notes payable, looked at sales tax payable, and hang on, I have a child that is calling me. Give me just a second. Yes, sir. All right, hang on just one second. Give me just a second. Hang on, guys. I'll be right back. Okay, I'm back. So, let me think. What was I saying? Okay, notes payable, current notes payable. You can also have current portion of long-term debt. I think that was out of sync, but it just reminds me of them. So if you had a long-term note that was, say, due in like 20, 30 years, but you're going to pay a portion of it in a year, then that portion that you're going to pay within the next year, the current portion, is going to be put into current liabilities instead of long-term liabilities. Okay? And let's see, what other things? We've got sales tax payable. That's going to be a current liability. You've got any unearned revenues are going to be listed there. What else? Payroll liabilities would be there, your payroll taxes. All those are current liabilities. Remember, current, you expect to pay it within a year's time. So anything like that, you're going to see listed in the current section, okay? And it talks about each one of those and instances for those and examples of those, okay? Bonds, one of my faves. Long-term liability bonds are, again, we talk about the types of bonds, debenture bonds, secured bonds, serial bonds. I think what other kinds of bonds that we talk about in here. Anyway, several different types of bonds that we had. Convertible and callable, the difference between those two. And we talked about issuing bonds, proceeds when you issue bonds, how do you figure out how much you're going to get for the bonds. Talk about determining the market price for a bond. And then we got into some more details for the actual bond issue. So what happens if you issue them at face value? What happens if you have a discount or a premium on the bonds? And then if you have a discount or a premium, how do you actually issue those and make a journal entry up and account for the actual issuance at a discount or a premium? And then we looked at redeeming them. So at either the end of their life or if you have, say, callable bonds, you're calling them, you could do that too. But if you redeem them at maturity or redeem them before maturity, so either one of those would be redemption. Okay, you could call it early and call it, say, like a 105, which would be 105% of face. So we talked about different ways to redeem, and again, different times to redeem those as well. And then how to present those in the financial statements also. Okay, so that was, again, very, very, very brief overview of Chapter 10. Okay, and I see I've got 2 viewers, but I can't see who it is. So let me see. I don't see any video for you, so if you're one of my students, you don't have your video on, turn that on so I can see you. Or if not, you can go in the chat bar and chat in the chat function. Okay, let's see. That was chapter 10. All right, again, briefly, just going over the main kind of what's included in the chapter. Chapter 11. All right, what was chapter 11? This was stockholders' equity section here. So we talked about corporations and the corporate form of stock, and we talked about issuing stock, talked about the different classifications or classes of stock. So authorized stock, the difference between authorized, issued, talked about whether it was par or no par stock, stated value, all those different terms that we talked about with those. So did some journal entries for issuance of stock. Then we also talked about treasury stock. What is it? We purchased some, looked at how we would record a purchase of our own stock, treasury stock. Then we looked at differences between common stock and preferred and differences with dividends between those as well. So preferred has a dividend preference. It has a preference if the company ever liquidates and gets kind of first rights after any creditors are owed. So talked about differences with that. And then we also looked at dividends. Paying a dividend. There's different kinds of dividends. You can pay out cash, you can pay stock, you can actually pay out property if you wanted to, but how would we account for cash dividends, stock dividends? And again, depending on your structure, if you have preferred and common, then preferred has first rights. And if you have something like cumulative preferred, then they get to keep up with those in arrears, that kind of like back pay, and get that paid before common would get a chance to share in any dividends. Talked a little about stock splits here as well. And any kind of restrictions you might put on retained earnings related to that for dividends. And then, again, we talked about some more financial statement presentation of those types of things. Okay. And then chapter 12 is all about cash flows. So the entire chapter there is cash flow statement. Excuse me. So we talk about what is the cash flow, why do we use it, what things would you find there, what classifications are there, and the different sections of the cash flow statement as well. So we talk about operating, investing, the financing sections for those. Talk about a little bit about non-cash transactions, what would happen with those. And we talk about actually making the financial statement itself the cash flow statement. So that's what this chapter is. So you should know how to do a cash flow statement by the end of the chapter. That's the entire chapter. So two different ways to do that, direct and indirect method. But we, again, focus mainly on that indirect method. So that's what we did in this chapter, was the indirect method. So without having anyone here to ask me questions, not quite sure what you might need to know more about. Any little tidbits I might give you? Well, you've seen the format of the test. It will be similar. I do have, since this is our last exam, I do have several questions that are just kind of some overview questions of the whole course. For instance, not that this is a question on the test, so don't misconstrue what I'm saying, but for instance, by now you should know, say, debit credit rules. So if I put a question on there about some debit credit rule, you should know that, because at the end of this course, you should definitely know that. So there may be a few questions, or a handful or more of questions that aren't specifically 9, 10, 11, 12. But you should, by this time in the course, excuse me, know some things like that. So I do put questions in there that have to do with the course overall, but things that you should know by now. So anything you need to, have specific, I don't know, like one question from chapter 3. I mean, it may pertain something, but I'm just saying, again, for instance, like a debit credit rule, you should know that by now. So I do have some of those on there. Other than that, it's 9, 10, 11, and 12. And I will state, it's pretty obvious from 12, you should be able to do a cash flow statement. All right, no one's here talking to me, and my child is crying for me. So let me check on him. And if you have questions, let me know. I'll be happy to help. Thanks, guys. I hope you do great on the final exam, and I'm here for you if you need me. Night.